Welcome to the show, everybody. With us today is President and CEO of Castle Gold Corporation, Mr. Thomas Atkins. Castle Gold is a growth-oriented gold-producing company with a number of projects on the go in Mexico and Guatemala. It has a 100% interest in the El Castillo gold mine in Mexico, combined with a number of exploration projects in that country. It also has a 50% interest in the El Sastre mine in Guatemala. Castle Gold Corporation trades on the Toronto Venture Exchange under the ticker symbol CSG. Now, as mentioned during the introduction of the show, Mr. Thomas Atkins, CEO of Castle Gold Corporation, is with us today to discuss the company's recent financial press release, as well as some of the company's developments throughout the second quarter. Mr. Atkins, good afternoon.
Good afternoon.
Can you give us a quick recap of Castle Gold Corporation's second quarter financial results?
Well, look, I mean, the first thing is, I guess, bottom line. People look at it and say, okay, we were neutral on earnings. We earned about $350,000. But, what's behind that is we are ramping up production. In the second quarter, we had some of the newer equipment arrive, and we did some additional waste removal, some waste stripping, which is a cost. We don't get paid for the waste. And we saw our grade come down a little bit relative to the first quarter. So we had about a 20% reduction in the grade of material that we mined, the ore that we mined, plus the higher strip ratio. So the combination of those two items, less revenue per ton that we moved of ore because of the lower grade, and then the higher cost of stripping, did impact our costs somewhat. And the revenue side, again, relative to what we moved. And then if you take the fact that we had a bit of a foreign exchange differential, the Canadian dollar has appreciated quite a bit. Mm-hmm. Those two things in combination trimmed off what would have otherwise been, $0.015 to 2 cents probably in earnings.
Are there any other short-term cost considerations one should be aware of?
Well, here's the thing: is the average grade of the deposit is 0.5 grams per ton gold, and in Q1 we mined material that graded 0.57. So, we had a pretty decent increase in that quarter, and so, really it's going to mean a reduction both in the second quarter, and we'll probably see about a similar grade around a 0.47, maybe towards 0.5, in that kind of 0.45 to 0.5 range, likely in Q3 of this year. So I would say not to expect, another high-grade quarter to follow. We're also going to continue to fairly aggressively remove the waste in Q3 as we're ramping up, continue to ramp up production. So those two things in combination, I would just say that, the Q3 results, I wouldn't expect, a great deal different, although we should be producing more ounces. But I don't know if the costs necessarily are going to be that much lower than say, what we experienced in Q2.
Now, looking forward, what can you share with the investment community regarding future developments in the coming quarters?
Well, look, that's sort of a bit of an outlook for Q3, and then by Q4 we do anticipate the waste ore ratio declining, and again we should start to see the grade sort of more around the average, and that so things should start to look a little bit more attractive by Q4. And again, all of this is part of our efforts to ramp up production. I mean, we are moving towards, sort of from the 25 to 30,000 ounce range annualized up to 50,000 ounces, and so we are having to remove more waste to permit us to achieve those production levels. So we are in a transition period. That combined with just the grade of the mine in the pit at present, and we don't have any control on that. This just happens to be what's there at this time. Those in combination are having a little bit of impact on our costs, but we anticipate getting through this period, and then we should start to see things strengthen.
Okay, that's good. How about Phase 2? Is that in the company's short-term plans?
Well, the Phase 2 is a drill program that follows up from some drilling we did in the spring, which is exploring the potential to increase the resources and reserves just to the south of the actual pit that we're mining right now. And we had some good results there. I think of 19 holes that were drilled, only two didn't hit material that would be of our resource and reserve grade. And so we're going to be we're just recalculating the resources right now, and with that recalculation of resources, that will prepare us for a Phase 2 program where we would do additional infill drilling to enhance the confidence in those resources as a step towards bringing that material into our mine plan. And when it's in the mine plan, we think that will avail us to perhaps, at the very least extending the mine life, but also possibly to further expanding production beyond the 50,000 ounce target.
That sounds like very encouraging news for shareholders.
Yeah, well, I think it will be. I mean, I think any time you can invest, really a small amount of money. I mean, that's the thing about, when you start to do step-out drilling on an already defined resource, is you've got all the infrastructure there. There's a certain level of confidence that the mineralization likely will have extended beyond what was initially defined. And as you start to do some of this drilling, we could be possibly finding an ounce of gold for something in the neighborhood of $2 to $5. And when you look at our margin per ounce of gold, which is in the $400 to $500 range at today's gold prices, that's pretty good leverage. And that's really what we're offering by this program, is that we can find gold, we believe, at pretty reasonable costs, and we can make significant margin on them because there's a mine right there.
Is there anything you'd like to discuss or add regarding El Sastre or La Fortuna?
Well, I guess the other two projects, El Sastre is winding down, as we've stated. I mean, I think they'll probably complete their mining activities, before the end of this quarter for sure, the third quarter. There is some residual crushing that'll go on to some stockpiled material, and we'll continue to leach the pad. So we'll probably see gold production through into 2010, but at lower rates. So that will continue to generate a bit of cash for us. And then the other is our La Fortuna project, also in Durango State in Mexico. It's the same state as the El Castillo mine. We've spent a good 6-7 months doing some surface mapping and sampling throughout the full 10,000 hectares, and we should have information on that shortly, where we'll start to then look at the next phase of exploration, which we hope will be, having identified some targets that we can start to consider putting some drills into and testing mineralization at depth and the extent of the mineralization. So that's I think offers a pretty interesting and exciting component of adding value as we look at advancing that project as well.
All right, Mr. Atkins, I'd like to thank you for your time and for joining us today.
Thank you very much.
You're very welcome. And that was President and CEO of Castle Gold Corporation, Mr. Thomas Atkins. Castle Gold is a growth-oriented gold-producing company with a number of projects on the go in Mexico and Guatemala. It has a 100% interest in the El Castillo gold mine in Mexico, combined with a number of exploration projects in that country. The company trades on the Toronto Venture Exchange under the ticker symbol CSG. Thank you all for joining us.